if we do rebound, exactly how far down is it expected to go to so we can catch that bounce before it goes higher? Or should we just be FOMOing in with the rest of the market and just buy it right now?
It is a great day for Bitcoin Cash investors, absolutely no doubt about it. The price has almost doubled in 2 weeks. The question is why? Why did it double? Well, yesterday I made this little YouTube video about Pepe. This YouTube short was really just a bit of fun as I was playing around with Midjourney, you know, the AI image generating tool, but kind of hinting at a more serious note, i.e. that because Bitcoin's now getting taken over by BlackRock with their ETF, and there absolutely will be some shenanigans going on there. So in that little short, I was just saying that Pepe could be the new Bitcoin, and maybe you should buy some Pepe because the price is probably going to skyrocket, and it probably is. Just look at Doge and all these other meme coins which are very popular. They do tend to go up, so fantastic for trading. I'm not saying to just put all your money in Pepe, but it is a good coin. The fact is that the reason why Bitcoin Cash has gone up is exactly the same reason. So because there's a lot of like hardcore Bitcoiners and that, looking at what's going on now with BlackRock and the ETF, and the fact that it's pretty obvious that they're going to be doing some sort of market manipulation, just like they have been for the last few decades with gold and silver and all of those other assets, it stands to reason that they're now going to be manipulating the Bitcoin market. Now, we've been making these posters every year since 2018 on the 1st of January, and it's basically a periodic table of cryptocurrencies, sort of periodic table style, and we just mark out where all the different coins are on the 1st of January. So you see here, 2018, Bitcoin Cash was an unbelievable $2,500 just for one Bitcoin Cash. So obviously a lot of room for growth. We go up here though to 2019, we can see that Bitcoin Cash had slipped a little and was now only $162. So in 2020, Bitcoin Cash had fallen then down into 5th place on CoinMarketCap and was then only 204. And then by 2021, you can see Bitcoin Cash had fallen again to 7th place and was now only 339. I say only, that's because it's 2021, sort of like near the height of the bull market. January 2022, position number 25 in CoinMarketCap. I believe that was $430. And then more recently now in 2023, we've got Bitcoin Cash again, all the way down there in 27th place on CoinMarketCap at a meager $96. All of these posters here that you see behind me, we actually give away to you guys, all of our members on Mutual Ninja. Every single year we make up a new one and send it out. So this year, because we've got so many of the 2022 posters, this one here, so this year we're actually sending 2, because last year was a bear market, we didn't have that many sign-ups. So when you sign up or sort of re-sign up this year, you're going to be getting the 2 posters. Why am I telling you all of this? Well, because actually it matters. So if you take a look at this, this is just the last 5 years, and I've missed out 2018 because obviously it was absolutely crazy. But you can see the mean average over those last 5 years is actually 246, and right now we're right here around $232, which isn't that far off the average over the last 5 years of trading. So although it's really high and it did happen all of a sudden, I don't think the price is actually that outrageous just yet. And of course, you really have to be asking yourself, like, why has this absolutely taken off all of a sudden right now? And it's because of the BlackRock ETF. You know, we know that the big banks, the big people, they're trying to basically take over the market and have ownership of the market. They've sued XRP a while ago now, bringing out their own FedNow system. They're also suing the 2 biggest exchanges, both Binance and CoinMarketCap, the biggest exchanges in terms of trading volume. So quite obviously, people like us, we're feeling a bit threatened by them coming in, and we absolutely know that they're going to be manipulating the market just like they have done with gold and silver
for decades now. We know it's coming with Bitcoin. So people want something else, something which isn't under the control of these. But really, what we want to know is just how far is it going to go? We know before it's been up to like 2,500 and beyond. So where is this actually going to go? Right here, we've seen that 246 was the mean average over the last 4 years, just taking one data point each year, which isn't very good, I know. So what we can do is use something like this. Now, this was something taught to me by a bunch of Goldman Sachs traders. This is called average true range, and you can look at this yourself. It's quite a complex thing, but I've actually built this now into the website. It takes all the highs and lows of all the previous prices and works out what they call the true range, and then obviously you've got the average true range there, and on the site you will see that what we have is ATP. So this is average true range percentage, because if you want to compare prices of assets which are completely differently priced, like you've got Bitcoin like 70,000 and other coins which are like pennies, you want to be able to compare those and see which ones are more volatile and what is this sort of average true range percentage of each of those assets. Now, if you've never heard of this before, don't worry, we're going to take some small steps here and give you some stuff which you could actually use in your own trading. So on the site here, so if you don't know how to get it, you just come here, fundamental analysis, and what we've got is basically the mega caps, the high caps, mid caps, low caps, and micro caps, and you can change that down here. And here we've got sort of a reference here. So we've got Microsoft, and you can see what the ATRP there is for Microsoft, which is just 2.7 on the daily. And then here's some of the cryptos and what you would get. So you can see that crypto is obviously a lot more volatile than stocks. In fact, down here, look, we've got the Dow Jones, just 1.43. And if you expand that out, so from a daily, so if you trade daily, you're not going to be capturing a lot of volatility if you're in and out the same day. If you go all the way to the monthly or the quarterly, you can see that there's a lot more growth expected or decline in the price. So it is generally better to trade more longer term than just in and out scalping. So scrolling down, we can see high cap here. This is where we're likely to find Bitcoin Cash. Here it is here, number 30. And you can see this is its values. So let's just say quarterly, it's 141, which is kind of puts it in line with XRP and Stellar Lumen. So it's a pretty flat coin to trade generally. Some of these up here at the top are near 1,000%. So not very volatile, but certainly more volatile than stocks. So if we check out Bitcoin Cash and scroll all the way to the bottom, we're going to be able to see that the all-time high for Bitcoin Cash was actually 3,785. So it's a very long way off. It's actually 93.8% off the all-time high. So there's a long way to go, and potentially you could get there again. An important thing I think to notice right now, if you're kind of new to crypto and you don't know exactly why Bitcoin Cash fell out of favor with crypto investors, it was all to do with the Lightning Network. So when Bitcoin actually launched the Lightning Network, the question was asked, is there really a point in Bitcoin Cash? You see, because Bitcoin was so expensive to send transactions, Bitcoin Cash was like an alternative to Bitcoin. So it was very handy for a time. But as soon as the Lightning Network came out and the fees for sending Bitcoin went down so low, Bitcoin Cash was pretty much forgotten about over the last few years, which is why you can see that massive difference in price. But now, maybe it could be due a comeback. So what we want to do is we want to know just what the average is that we can expect, and wonder if it's already gone too far. So looking at the chart right now, we can see that the price is absolutely sky high. We want to know, is this expected to continue, or are we going to be rebounding? If we do rebound, exactly how far down is it expected to go to so we can catch that bounce before it goes higher? Or should we just be FOMOing in with the rest of the market and just buy it right now? Okay, so what we can see on the stats up here, we've got the close to close returns, and this has a standard deviation of 28.79%. So earlier we worked out the average, which was the mean for the 5-year period. So this means that the close of each day, okay, or each month, so the end of each month, this would be the deviation from the mean average. So down here we've got the highs and lows. That's what I'm more interested in, and you can see here that the standard deviation is actually 49.7%. So what we're going to do is we're going to head over to the chart here, and we're going to put on here an envelope. So just put in env, and here we go. We should see an envelope appear now. And then what you're going to want to do is just click on the settings for the envelope. And I'm currently in here on a daily chart. So a month basically has about 30 days in it. So we'll put this on at 30 so that each data point in the averaging is going to be monthly. And the percentage there was 49.7. So we'll just call that 50%. And then what we're going to want to do is, you can see right now we're well over it. So in the past, because this was the average high to low, we should be able to see that this has happened before. And then we'll also see exactly what happened afterwards. So if we scroll out to the beginning, here we go. So we can see it has actually came out before, and then it's fallen back down before going a little higher. It's come out down the bottom of the 50. Coming up again, we've again came out before, and what happened was it fell back down. We came out again here and it fell back down to the mean average, this orange line. Again, we came out the top, very explosive, and then came back down to the mean average. Here we came out to the top, went down to the mean, and then followed down through. And that's because that was basically the end of the bull run. So you can see that's May 2021. Going further forward, you can see that it's been pretty flat, which is probably why the ATRP is so low on it. And right now we've come all the way out here to the top. Now, what I would expect if we're out the top again is, because every single time it has come out the top, it hasn't really stretched much further than that 50% from the mean. Okay, so 50% from the mean has historically been pretty much it for Bitcoin Cash. So if we come to where we are right now, you can see obviously the volume has gone all the way up and is now starting to come down. And I think you're probably in the next couple of days going to see the price maybe start to drift back down. Now, when it does drift back down, it's probably going to come down along this mean average line here. So probably likely to be dropping back down and hitting that average before going higher. Exactly what that price will be, I don't know, but likely to be in and around this range here. So maybe from about 150 to 175. So that would probably be, within that range, a really good place to start buying into Bitcoin Cash, because fundamentally we can see that investors are interested now in using it. Despite Bitcoin having a Lightning network, they just don't want to be holding their cash in something which is controlled by the big banks. So if that's a good place to hold it, how far could it potentially go next? Well, one thing that you have to realize is we're not actually in the full-on bull market just yet, so we're probably not going to be going to the moon. But here you can see on the fib levels here in 2021, and this was pretty much a bull run, so this was after the Bitcoin halving. You know, we reverted back down here to the sort of 0.382 level on the fib, and then went all the way up to the next fib level. Now, if that does happen in this case, what we would have is, number one, is this little box which I just drew on here earlier, pretty much rest down on that same exact 0.382 level. So again, it's just getting more and more likely that that is the type of level that you're going to be wanting to be looking at it going to. And then it was going up here to this level here on the Fibonacci, which would be 286, which would of course be an opportunity to gain approximately 90% on your money. Not a bad return at all for about 6 months worth of trading. Anyway, if you think that is a cool way to do a strategy, something which is a little bit more thoughtful than just randomly buying coins, I'm currently actually putting that ATRP strategy into a real strategy that we can use with the trading bot, and then hopefully profiting from that in the future. So if you want to see more about that, do let me know in the comments down below. And that's it for now. I'll see you again in the next video.